I went from making $3,000 to $5,000 a year to a professional snowboarding career. And now my team and I, we're building a $430 million real estate portfolio. And along the way, I've tried, I've studied, I've watched people blow up with just about every investing strategy out there. Today, I'm putting 12 of them on a board and ranking them S tier to F tier. Let's get into it. So looking at day trading. The day trading, gosh, seems very volatile. I don't know much about it. For me, 100% D tier. I'm sure that with enough training and the right mentor that it's possible to do well. But for me, definitely D tier. Crypto, I'm putting that more as an A tier. I see crypto as a extension of gold and silver. I am now no professional, but for me, the idea of putting a little bit of my wealth into crypto, to Bitcoin and Ethereum, the big ones, not the altcoins, seems like an investment strategy that's worth making. And if I miss out on it, I would rather lose a little bit than just not have tried at all. Index funds, I don't know anything about. I'm putting it in D tier. I just can't even comment on it. Just not something I'm interested in. Stock picking, D tier. I don't know anything about it. I don't have information and strategies and can see a clear future as to why it's going to do well. I'm not interested in it. Fix and flip, I'd say you could probably put it as a C tier, depending on the asset you're buying. You know, it's a smaller asset, single family home. It just takes a lot of work, and it's usually not that big of an asset if you're just doing single family. Wholesale leasing, D tier. You just got to work a lot. You make a lot. You get taxed a lot. Airbnb, D tier. You work a lot. There's a lot of turnover. It seems, just like a lot of work for a very small upside. With that said, if someone's great at these, if you're great at wholesaling, great at Airbnb, I'm sure it can be a higher tier. But for me, D tier. House hacking, D tier, just a waste of time. You're buying and refurbishing and potentially selling and, bringing people in. There's just so much to do for such a low model of return. The berm up method, I probably put it as a B tier just because it's small still. Like even if you do it and do it well, you've got small single family homes. Again, I don't know much about it. So could it be an S tier for someone who's really great at it? I'm sure it is. For me, maybe a B tier. Private lending, I'd say B tier. I just don't know enough about it either. Don't know exactly how to make it work in my portfolio. For me, where I'm at in our strategy of building wealth, I'm looking for larger gains of being able to force value through NOI growth. For a syndication, I'm putting it as an S tier. It's what we do. It's what we specialize in. To be able to buy an asset with a group of individuals that you could not buy on your own, right? You're not going to come in and buy likely a 250 unit apartment complex for $40 million on your own. But it allows investors who are wealthy that want to put their capital to work to get into an asset like that where they can now be a LP or a minority owner and still own something real, to be in the real estate, but not to have to go buy it and operate it all on their own. And that's the other piece too. Like you're looking for people to do the operations, to manage the real estate, which is what we do for them. So we'll come in, we'll buy an asset, we'll put together 30, 50, 80 investors, we'll all own it. And then we at Granite Towers will make the decision on what to do with the asset and how to drive net operating income. And the way we're increasing value with syndications is we are either increasing income and or controlling or reducing expenses in order to drive NOI. A dollar of NOI increase is $20 of value on an exit. So if you can drive net operating income over a 3, 5, 7-year period by $1 million on the exit, you've got a $20 million valuation creation. So that's why I would put syndication as an S tier. Buy and hold, I would put that as an S tier as well. I'd put that in with syndication, right? You're buying an asset, holding for the long term, ideally forcing value creation, forcing NOI growth, and potentially refining capital out tax-free, holding long term. If you want to learn more about what we're doing and how we're forcing appreciation in this market, click the link below.